In this case, weekly overview May 30th, 2023 to June 6th, 2023. Change of sentiment, will there be a raise? Is Bitcoin still the best choice? Whales are slowly returning to the market. Glassnode Tier-3. Huge drop in activity on Bitcoin. ETH price at risk. Glassnode Tier-3. High profits and high risk, reinvestment strategy. Ethereum Cancun, another network update. How does pump and dump work? Bitcoin SV analysis. Summary. Weekly overview, May 30th to June 6th. Tuesday, May 30th, 10 o'clock, US Consumer Confidence Index forecast, 99.1 previous reading, 101.3. Wednesday, May 31st, 10 o'clock, US non-farm payrolls forecast, 9.41 million previous reading, 9.59 million. 12:30, speech by FOMC member. Thursday, June 1st, 8:15, estimated change in non-farm employment in the US forecast, 167,000 previous reading, 296,000. 10 o'clock, Purchasing Managers Index, PMI for producers. Friday, June 2nd, 14:30, average hourly earnings. 8:30, change in non-farm employment. 2:30, US unemployment rate forecast, 3.5% previous reading, 3.4%. Monday, June 5th, 10 o'clock, Purchasing Managers Index, PMI for services. Tuesday, June 6th, no significant events. Based on the information provided, it can be stated that investor sentiment has undergone significant changes due to recent events. According to the data, over 57.3% of investors believe that there will be another interest rate hike. However, it is important to remember that the data presented is from a specific moment, and final conclusions should not be drawn before the release of labor market data and CPI inflation figures. Key labor market data is scheduled to be released on Wednesday and Friday, and their results will be crucial in shaping investor sentiment. Recent speeches by Federal Reserve Chairman Jerome Powell and FOMC members suggest a certain determination regarding another interest rate hike. However, economic data from the markets are quite positive, indicating a slight economic recovery in the USA, with indices such as the S&P 500 and Nasdaq experiencing a good period. The ultimate decision regarding a potential rate hike will depend on data such as CPI inflation and the unemployment rate. If these indicators show positive trends, it is possible that another hike may not be seen. However, it is important to understand that while changing words can have significance, the final decision relies on actual economic data. Last week, the price of Bitcoin rose, surpassing the 100-day moving average on the weekly chart and closed in the green. However, caution should be exercised and excessive optimism avoided. The previous week started without a yellow dash, indicating a temporary halt in selling by major players in the market. Glassnode also confirms this. The combination of these factors led to a price increase above $28,000. Unfortunately, as the price of Bitcoin returned to higher levels, selling pressure from major players reemerged, indicating the possibility of slight declines in the medium term. Currently, our plan assumes Bitcoin breaking out towards the $29,000 to $30,000 range to gather liquidity from previously opened short positions, followed by a swift and aggressive drop to the $27,000 to $28,000 level. Bitcoin's dominance over the market remains very high. For the second time, we are witnessing an attempt to break through a 2-year resistance. This time, the chances of success are much greater. In just 2 days, on June 1st, retail investors in Hong Kong will be able to legally trade cryptocurrencies. However, they will only have access to major cryptocurrencies, including Bitcoin, of course. We can expect a slight increase in Bitcoin's volume on that day, which is associated with increased volatility. Currently, it is difficult to assess which direction Bitcoin's price will move. In the long term, Bitcoin is likely to remain one of the better choices due to the upcoming reduction in new unit emissions. The closer we get to this event, the more media attention we will see regarding it. Now let's take a look at liquidations in the Bitcoin market. Here we have a 3-month period. We know that the price is often manipulated, moving between liquidity areas. Large players look for such areas to increase their positions where liquidity is normally lacking. A perfect example of this was the event that occurred in mid-May when we had sharp drops that precisely reached the liquidity level. Since then, we have observed consolidation. The current lack of sharp price movements may be an attempt at manipulation. Large institutions are waiting to saturate the market with liquidity and then liquidate all those positions. Overall, in the past month, we have only seen movement from one liquidity area to another. Currently, we have two main and huge liquidity zones. The first one is located around $25,400 and seems attainable. The second zone is slightly lower, around $22,600. It cannot be ruled out that before the final and most dynamic upward move, we will reach the first zone so that large institutions can open their positions. However, let's remain cautious and remember that the cryptocurrency market situation can change rapidly. It is important to monitor multiple factors such as investor sentiment, regulatory news, and the overall state of the financial market. Bitcoin net transfer volume from to exchanges by size. This is an indicator that shows us the size of transfers to stock exchanges, divided according to transaction value. What we can notice is that during the recent declines to around $25,800, the whales have joined in buying this dip. This is very positive information for us, even though the purchases were not very large. For the first time since the FTX crash, we have seen the largest portfolios, pink color, aggressively accumulating BTC. This thesis is also confirmed by the accumulation trend score, which has been used several times here. Over the past few days, it has risen from a level of 0.05, complete lack of accumulation, to a level of over 0.25, indicating that large entities have made small purchases. Bitcoin, relative activity of small and large entities. On this chart, we can monitor and compare the activity of large and small investment portfolios in cryptocurrencies. The blue line represents the activity of small portfolios, while the red line represents the activity of large portfolios. From a long-term perspective, the situation does not look very promising. The activity of both types of portfolios is at record low levels, indicating a lack of increased demand for cryptocurrencies. At first glance, we can observe a significant decline in activity for both small and large portfolios over the past 2 months. However, if we look at the last few days, we can see a rise in activity among whales, while smaller portfolios remain inactive. Although the increases are not significant yet, they represent the first sign of interest in the cryptocurrency market. Smaller investors do not play a significant role in the early stages of a market rally, as they tend to join in later during the FOMO phase, thus fueling the final phase of the bull market. It is worth noting that the above information is merely an analysis based on the presented chart and does not provide certain predictions about future trends in the cryptocurrency market. Bitcoin, number of active entities. We can see the number of active units on the BTC network here. This directly indicates the adoption and utilization of Bitcoin. Unfortunately, we observe some very negative news. In just 1 month, there has been a 15% decrease in active units, which is by far the largest drop since the peak of the bullish market in 2021. Perhaps the investors from Hong Kong, who will soon enter this market, will boost this activity, but currently, the situation does not look promising. Investors are becoming bored with the market and either completely withdraw their capital or make unwise decisions, resulting in significant loss of funds. Ethereum, whale net position change. Currently, on the Ethereum blockchain, significant changes in the number of ETH held by wallets with between 1,000 and 10,000 coins are being observed. Disturbing reports suggest that large entities are dumping massive amounts of coins onto the market. This mass sell-off is the largest since the bullish growth in 2021. It is worth noting that this is not merely a reshuffling of positions between wallets, as most large wallets are also showing selling activity. There is a possibility that some capital is being moved into Bitcoin, which is currently considered one of the few assets that won't be classified as a security. Despite these sell-offs, it is important to remember that Ethereum remains a strong investment in the medium and long term. Many individuals still want to stake their coins in Ethereum. If the significant amount of selling has not caused a substantial price drop, we can infer that Ethereum remains very resilient. However, it is important to emphasize that the above analysis is based on uncertain information, and caution should be exercised when interpreting this data. Cryptocurrency markets are highly volatile and subject to various external factors that can influence their value. High gains and high risk, the reinvestment strategy. Cryptocurrency investors are always looking for high-yield strategies that generate significantly higher profits than any other investment assets in a short time. One such strategy is reinvesting and looping one's funds. This strategy takes advantage of differences in interest rates and profit-generating tokens offered by various lending protocols. These protocols function similarly to traditional banks, allowing users to deposit cryptocurrencies and earn interest from their assets. However, in DeFi, decentralized finance, protocols often issue their own tokens as incentives for depositors, creating an additional opportunity. The reinvestment and looping process looks like this. 1. The investor deposits Bitcoins worth $100 as collateral in the lending protocol. 2. The protocol pays 8% interest on the deposit and additionally rewards 2% in its own native token. 3. The investor then borrows Bitcoins worth $80, puts them back into the protocol, borrows a slightly smaller amount, and repeats this process. 4. Through continuous reinvestment and collateral lending, the investor can significantly increase the amount of cryptocurrencies he has in the protocol and earn even tens of % more interest from the original deposit. A similarity of this strategy can be found in the housing market, where real estate investors buy, rent them out, and then take out loans against those properties to buy more. This allows them to expand their investments. However, just as a small change in the housing market can have significant consequences, looping in the world of cryptocurrencies also carries much higher risk. The delicate balance of the loop can be easily disrupted, for example, when loan interest rates change in the case of the real estate market, or when protocols stop issuing their native tokens in the case of cryptocurrencies. As more and more traders engage in looping, the lending market becomes more efficient, reducing the potential for arbitrage. Native tokens provide holders with profits in addition to the asset price increase. For example, the STETH token represents the amount of Ether staked to support the Ethereum blockchain. Traders can deposit STETH in the lending protocol and earn interest from their collateral, as well as recover profits from any potential increase in the token's value. As DeFi technology becomes more advanced and transaction fees decrease, developers are creating automated looping tools to make the strategy more efficient. However, as the cryptocurrency market continues to evolve, it is important to stay up to date and make informed decisions when exploring these high-risk trading strategies. It's important to remember that looping involves a high risk, as the delicate balance can be disrupted by changing market conditions such as fluctuating interest rates, lack of native tokens, or other external factors. Therefore, a thorough analysis and risk assessment should always be carried out before applying the reinvestment strategy. High profits can be achieved, but you should be prepared for the possibility of losing your investment. Any investment decisions should be made based on your own research, knowledge, and ability to take on risk. In summary, the reinvestment strategy based on looping funds in lending protocols can generate high profits, but it also carries a high risk. It is important for investors to be aware of potential threats and make decisions based on careful analysis and risk assessment. An important Ethereum network upgrade called Cancun is approaching. Last Thursday, key Ethereum network developers gathered to discuss potential ideas for improving the network's functionality. The weekly Zoom meeting covered various proposals for enhancements called EIPs. The discussion provided insights into possible future changes, such as plans to remove the self-destructing opcode, progress related to EIP 4844, and the anticipated Cancun update. The main goal of these changes is to increase the functionality and efficiency of the Ethereum network. About a month ago, another update known as Ethereum Chapella was introduced. This update brought significant modifications to the network's operation. The beacon chain, created during the transition from proof of work to proof of stake (POS) in the Chapella update, played a crucial role. To maintain network security, enable transactions and smart contracts, the POS-based network required validators instead of miners involved in POW-based blockchains. Those interested in participating in Ethereum 2.0's future, i.e., Ethereum after the merge, could deposit 32 ETH into the Beacon Depositor contract to support the Beacon chain. Validators received profits from their ETH deposits as a reward for maintaining network security at this stage. However, there was a catch: validators couldn't withdraw their 32 ETH until an unknown future moment. The implementation process of the merge lasted several years, but with the Chapella update, validators could finally withdraw their deposited funds. The Beacon Depositor contract held around 18 million ETH, approximately 15% of the total ETH in circulation. The ability to withdraw the deposit and later sell it suggested the possibility of short-term declines due to selling pressure. Nonetheless, after the introduction of the Chapella update, the value of ETH increased significantly more than that of BTC, reaching a record level that had not been attempted before. The planned Cancun update aims to introduce a series of significant improvements, including enhancing mechanisms such as memory copying and connection instructions. Not many blockchain networks have taken such bold actions to increase their utility. According to Ethereum's creator, Vitalik Buterin, the network is currently in an excellent state. Considering the continuous development and improvement of Ethereum, one can sense very strong long-term signals from ETH. Although the exact date of the next update has not been determined yet, there is talk of a timeframe around October-November 2023. It is possible that we will witness stronger growth during these months. Pump and dump is a manipulative tactic used in financial markets, including the cryptocurrency market, with the aim of artificially increasing the price of an asset and then selling it at a higher price, generating profits for the manipulators at the expense of other investors. The typical process of a pump and dump scheme is as follows. 1. A group of manipulators selects a small cryptocurrency that is easily manipulable due to its low liquidity and market capitalization. 2. The manipulators accumulate a large amount of that cryptocurrency at a low price, creating a volume of purchases that can influence price growth. 3. The manipulators spread positive information and speculation about the cryptocurrency, creating artificial demand. 4. As a result of increased investor interest, the price of the cryptocurrency starts to rise. 5. The manipulators sell their cryptocurrency holdings at a higher price, causing a sharp decline in price for other investors. 6. The remaining investors who bought the cryptocurrency at an inflated price experience losses. In the case of analyzing Bitcoin BSV, it appears that a pump and dump scenario occurred. The sudden price increase of BSV may have been due to manipulation rather than specific news or fundamentals of the cryptocurrency. Information about congestion on the Bitcoin network and the blockage by Binance may have contributed to increased interest in BSV as an alternative to BTC. However, when the price reached a certain level, large investors may have started selling their holdings, causing a significant price drop. In the case of pump and dump schemes, investors without access to confidential information have difficulties in detecting such manipulations and risk significant losses. It is important to exercise caution and avoid making investment decisions based on speculation or emotional pressure, FOMO, fear of missing out. Instead, thorough market research, analysis of cryptocurrency fundamentals, and investment based on long-term strategies are recommended. In the past week, significant changes in investor sentiment have been observed. The PCE report has led to the majority of investors anticipating an interest rate hike by the Federal Reserve, Fed. The upcoming week will be crucial as we will receive U.S. job market data, which Jerome Powell aims to influence in order to justify the need for rate increases. Glassnode Tier-3 data shows a slight awakening among whales. For the first time since the FTX crash, we have witnessed miner buying activity in the largest wallets. Unfortunately, data from Ethereum indicates a mass sell-off of tokens. It's possible that investors are diversifying their portfolios by swapping ETH for BTC. An interesting strategy for reinvesting cryptocurrencies involves continuously looping them through various pools, creating opportunities for high returns but with greater risk. We have also learned about the latest Ethereum update, which further enhances the blockchain. The previous update resulted in this year's all-time high ETH. One of the most anticipated airdrops in 2023 is ADA Chain. The qualifying tasks are not difficult, but it requires consistency and patience. Pump and dump schemes are quite common in the cryptocurrency market. Recently, such a maneuver took place with the BSV token, which was likely artificially pumped by major financial institutions.